welcome. You're watching Business Today TV. I'm Sakshi Batra, and this is a fresh and new edition of Behind the Scenes, a show where we share a sneak peek of the latest issue of the Business Today magazine with all our viewers. And with me on the show, I have all my colleagues joining in who've contributed to the latest issue, which is this that I have in my hands, and I've got my copy as of now. I'm joined in by Ashish Rukhaiyar, my colleague, also Bhavya Kaushal and Akanksha Chaturvedi joining in on this edition. Well, welcome to all of you, and thank you so much for taking the time out on this discussion. Now, this issue is very, very interesting for a whole host of ideas that have been discussed and stories from a space and wide space that we've discussed in this issue. Let's start off with the cover story first, however, which is on how a battle is now brewing in the asset management space, and as new investors have already flocked in onto the D Street, looking at the kind of movement that we've seen in this on stock markets over the last 2 or 3 years, we've seen also an emergence of new apps which are perhaps allowing more and more fresh and new millennial investors to get easily onto the trading investment platforms due to with their smartphones as well. And a slew of new players are also lining up to enter the mutual fund sector as well. And Ashish has covered this story in this issue. So Ashish, let me kickstart with you. Help me first know about which are the new players that are entering the mutual fund arena, and how are they really challenging the existing players as well.
Hi Sakshi, thanks for having me on this show. Let me quickly give you the background of the story and why this story is exactly relevant in today's time. Now we have more than 40 mutual fund companies in the Indian mutual fund space, and the top 10 fund companies account for more than 80% of the AUM. The collective AUM is more than 40 lakh crore, 40 trillion rupees. If you look at the number of folios, basically the number of investors, that has also grown by over 20% each in 2022 and 2021, which is a huge jump from the earliest single digit annual rises. And overall, the Indian mutual fund space is a very tightly regulated and highly competitive one. So the
That's true.
entry or the interest shown by newer players is actually a big story to be told. Now, as far as new names are concerned, we have Zerodha, we have PhonePe, Helios Capital, Capital Mind, Angel One, MK, Bajaj Finserv. These are some of the names that want to enter the mutual fund space. Now, the important part is that some of these names, whether it is PhonePe, Zerodha, you have Helios, you have Navi for that matter, they all have been disruptors in certain other sectors. Zerodha, we all know, has been a big disruptor in the broking space, PhonePe in the payments segment. So Helios, Capital Mind, they are very well-known active fund managers. So a lot of good marquee names are trying to get into the mutual fund space. Now let's come to the second part on how they will challenge the existing players, because as we mentioned earlier, there are more than 40 fund houses and there are few very large fund houses. Their AUM is in excess of 1 lakh crore each. So
That's
how
true.
they can challenge the incumbents? If you talk to industry players, they say they have to come out with differentiated products or cheaper products. Now, for instance, maybe we can look at these investment themes. Some of the mutual fund houses in the recent past have filed documents and they want to launch in schemes based on themes like, say, clean energy, artificial intelligence, electric vehicle, metaverse, IoT. So these are some of the new themes that these new fund houses may look at. Some may look at active
Right.
or even passive route. Samco, for instance, Samco is a recent entrant. They launched an ELSS scheme with a focus on small cap and mid cap, which is a large shift from the traditional ELSS schemes, which predominantly focus on the large caps. White Oak claims it has a proprietary analysis and valuation model based on which it does its stock picking. So industry players believe that there is a lot of scope for disruption in the mutual fund industry, but it has to be on the basis of performance or as transaction efficiency or cost is already there. So all these new fund houses, they'll have to, even if they may come out with innovative products, or they may even come out with similar products, but performance is going to be the key factor, because mutual fund industries operate on a lot of trust. If you are able to get performance, if you are able to get returns to the investors, then new investors are going to come to your fund house. So
Hmm.
there are a very good list of names which are going to enter the mutual fund space, and they'll be challenging the incumbents based on innovative products and maybe cheaper products as well.
That's right. But will they be really able to disrupt the already 40 lakh crore rupees mutual fund segment that we have, which is ever growing, and the traditional ways in which retail investors have been used to of investing?
That's an interesting and a very important question as well, because if you speak to industry players, the view seems to be divided as of now. They say that there is definitely space for more players, but incumbents are already tech savvy, like we mentioned earlier. Whether it is Zerodha or PhonePe, they have been disruptor in their own space. But when it comes to mutual fund, it is already a lot. All the incumbents are already tech savvy. There is already a lot of innovation that is happening. Let's take the example of 2020 when during the
Hmm.
lockdown year a lot
Hmm.
of new investors came to the mutual fund segment. And the reason is that the technology was already there, seamless onboarding. Any investor who wanted to buy a mutual fund scheme, he or she could buy it sitting at home. So technology and everything is already there, innovation is also there. But they say that since there is a lot of room for a more high penetration level of mutual funds, so there is space for new players, that's for sure. But the innovation, only time will tell whether the mutual fund arena will see a battle of the old versus the new, or it will be just among the bigger ones. Because the
Right.
bigger ones will obviously continue to enjoy the benefits of scale. But one thing is
Hmm.
for sure, the average Indian investor will emerge as the ultimate winner, because he will have access to innovative products at an affordable cost, and with the passage of time, he'll also have a track record of performance to choose from, whether it comes to new fund houses or the older ones.
That's right. Well, absolutely. Thank you so much, Ashish, for sharing with us this interesting, points. How the mutual fund industry is really looking to evolve with these new entrants, and how is that going to really increase the scope of more and more investors coming into the fray, exploring the world of mutual funds with an ease, with the technology help as well. And of course, more innovation means easier access and perhaps wider access to more people as far as the investment world of mutual funds is concerned. Let's now move on. There is a lot of other interesting stories also that's covered in this issue as well. Let me take it across to Akanksha Chaturvedi, my colleague, who's been covering the IT sector and the issues right there for a long time now with us. Perhaps all of us do know that how the IT sector has been faced with a number of challenges over the last 6 months or a year or so. We've also seen their underperformance on the street as well. And when it comes to human resource, perhaps the challenges are far and wide, including the high attrition levels, the layoffs, and the talent outflow that we've been witnessing for the last 1 or 2 years. And now the salary hike stagnation that Akansha has focused on this issue as well. Now, Akansha, what you pointed out in your story is that there's a widening gap between the way how IT CEO's salary today has really grown over the years vis-a-vis the bottom of the pyramid. So, what does data really show? Could you help with some of those data points to all our viewers? And why is there such a widening gap there?
Well, thank you. Thank you for letting me join this show, Sakshi. So, we got data from five companies. We had data from TCS, Infosys, Wipro, HCL, and Tech Mahindra. We tried to compare the salary of freshers in 2012 and in 2022, and we did the same with the salaries of CEOs. We compared their salaries in 2012 and in 2022. We tried to see how the salaries have increased over the years. So, to begin with, the average salary in 2012 of a fresher was around 2.45 lakh rupees, and in 2012, uh, so it has increased. It's around the same right now. It's around 3.6 lakh rupees now. But when you talk about the salary of the CEO, it's around the 75-80 lakh mark. This was not the case in 2012. The salary has seen a 1500% hike on an average basis, which is not the case with the freshers. The freshers' salary has gone around 46% up in the same time frame. So as you can see, in the 10 years, the CEOs have made 1500 times more money than they did
Yeah.
10 years ago. That is not the case with the freshers, and this is also being addressed by industry veterans. We spoke to Mohan Das Pai, we spoke to Vineet Nair, as well as Kiran Karnik. They all believe that the IT sector, which was once known to pass down the benefits to the bottom of the pyramid, they're not doing that anymore. And this is one of the reasons why issues like moonlighting, attrition, quiet quitting has also become rampant in the industry.
That's right. Of course, these are some mind-boggling numbers, and definitely, one needs to really think more through as to why this gap, and why the widening gap, and perhaps the IT sector as a whole, the regulators will also have to keep a keen look as to why, where does the problem really lie. But like you pointed out towards the end of your answer as well, I was coming to that to understand why the issues of high attrition, quiet quitting, moonlighting, layoffs, and talent outflow have become such a big challenge for the sector over the
Yeah.
just last recent few years.
Yeah, so the thing is, digitization became a norm across sectors. IT sector employees, IT professionals were not just needed when it comes to IT companies, they were needed across banks. Startups needed IT professionals because the whole digitization transition was taking place. This showed employees that they had better options, companies who would pay them better, who would treat them better. That's why we can see, the rise in attrition rates, the employees, demanding for more competitive salaries. There are
Right.
other problems as well. Yeah. So, like in the
All
story,
right.
we talk about main problems, which is one is the stagnation of salary, other is the attrition rate, moonlighting, all of that, and the third is the delay in onboarding, which we also covered in one of the previous issues of the show. So these are some problems, some which we've realized the three big main HR issues that are plaguing the IT sector, the Indian IT sector lately.
Absolutely. Well, thank you so much, Akanksha, for giving us a sneak peek into the insights that you've shared from the IT space. Of course, it'll make for a very interesting read for all those people who are very watchful of the sector. And of course, India generates the maximum employees from this sector too. So a lot of young millennials would be interested in reading this story too. Let me now take it across to Bhavya Kaushal, my other colleague who's joining us on this edition. And she's also written a very interesting story on being sensible with AI, artificial intelligence. So let me just kickstart by understanding from you, Bhavya, what exactly is being sensible with AI, or what exactly is responsible artificial intelligence when we talk about, and in what context are you covering this?
Right, right. Thank you so much. So, Sakshi, I'd like to start by saying that a lot of companies today are deploying various technologies like artificial intelligence, IoT, machine learning, and so on and so forth. When we talk about responsible AI, it basically means that you use AI, artificial intelligence, in a way that it fairly impacts your customers, your business, your employees, and basically builds an overall trust and confidence within and without the organization. So that's responsible AI. And I also want to share that how I came across this. So a couple of months ago, I read this a small incident which happened in 2018, but it became big and it sparked a big debate within the tech industry. So Amazon, it terminated one of its recruiting tools because it was found to show bias against women. So what was happening is
Yeah.
that it was recruiting only men and driving away all the women candidates. So the engineers and of course the HR team, everybody was very confused that why it's happening. So when they dug deeper, they actually found out that the AI was trained using data from a time when the tech industry was dominated by men. So, in retrospect, the AI tool had learned to drive away the women candidates automatically. So, this became the peg of my story, and I kind of, explore it more in the context of the Indian startup ecosystem. And yeah, there's this and a lot of other things about responsible AI in the story.
Right, absolutely. Also, could you help us understand, Bhavya, that why is it important to introduce the concept of responsible AI early on, at least in startups when we speak of?
Right, right. So there are many reasons actually, but two most important reasons that I explore in the story is first that founders get very excited, when it comes to technology, because India is still scaling up technology, is still trying to understand how to integrate it technology. So this technology becomes a point of fascination for founders, and other things, kind of take a backseat. The second reason is, and it's a genuine reason, that they have so much to do. Startup founders have so much to do when they are, building a business right from the scratch, that they don't have the time and space to think about responsible AI. So they are so busy in executing it that they are unable to think about, the unintended consequences that can potentially emerge. And that is something, that the story encourages startup founders to sort of guard against, because all the things that they omit will come to bite them later in some way or the other. So the bottom line is that let's think more seriously about responsible AI. Let's run a lot of pilots, a lot of experiments, and use as many as data sets as possible. I have spoken to the top guns of the industry for this story. We have Adobe, we have Google, we have some SaaS unicorns, who are participating in this story. So that should make a good read for it.
Absolutely. Well, thank you so much, Bhavya, for that update. Ashish, Akanksha, Bhavya, all three of you, thank you so much for sharing with us the insights in your story as well. In your respective stories. And this issue, I'm sure, is a very, very interesting read. And also, this comes right when the new year has begun. And there are some very interesting insights also on the trends that will shape up 2023. So, for all of those viewers interested in that as well, do go ahead and grab your copies of the Business Today magazine. I've got mine, and I can't wait to read all of these stories to get all these insights about what's really happening in all these different sectors, from mutual funds to IT to even technology and AI as well. Many thanks for joining us. It's been a pleasure speaking to all of you.
If you like the video, do like, comment, share and subscribe.